excited to be here. I don't know if any of you guys know me, probably not, but if you do, I'm huge on blockchain and crypto awareness. I'm a realtor, but I'm an entrepreneur first. Blockchain is something I'm super, super excited about because I know it's the future. Everything is going to change. I'm 100% convinced that this is the future, and how we educate ourselves and make sure that we're in the know, making sure that we can be relevant and position ourselves in the right place.
And so my background is in real estate, private equity, and investment banking. My family's actually been in real estate in Los Angeles for 4 generations. And I realized while I was working in private equity that the method by which we conducted real estate transactions was almost exactly the same as the way that my great-grandfather had been doing it 100 years previously. The only difference was that instead of sending a runner with the book, you just emailed a PDF. But otherwise, it was basically the same process, even down to relying on the recording office to stamp your thing, and if you weren't in line at 8 a.m., the deal's pushed 24 hours, and your buyer hates you, your seller hates you.
It's all your fault.
And so I thought to myself, this industry has to change. We are in a time of great disruption driven by technology, and there was no way that I was going to be a part of that conversation sitting behind the desk at a private equity fund. And so I left, I joined a company called Slice, and we ended up tokenizing one of the first commercial properties in the US, which was a deal in Chelsea, Manhattan, $380 million ground up development. We took a $5 million piece of the LP and sold that internationally in the form of tokens. And so now I run Digital Asset Advisors, and I'm involved in a number of different blockchain and real estate initiatives, and so I'm super happy to be here and share what I learned and my insights and answer your questions.
Awesome. Hi guys. So I built a couple of pretty big internet companies back in the late 90s and sold them, and then I went into the retail spot foreign exchange markets where we built the very first automation for trade order execution. Fast forward to now, I was involved in very early stages of blockchain and BTC when it was first coming out, and because of my background I was attracted to it but very cautious about the technology because it was it was the very beginning. So we followed it, watched what was going on, and over the years kind of traded it underneath the radar. And what we decided to do was, fast forwarding till now, the last couple of years, is there's a lot of market manipulation, a lot of scammers. There are a lot of people that just getting hammered in these markets because they just don't truly understand how to go about even getting into cryptocurrencies, which I don't really like to call crypto. I like to call them digital currencies or digital assets. Just the term crypto in itself is cryptic, and a lot of people are scared by it. Ooh, it's crazy. So with that, the similarities from foreign exchange or the retail spot Forex markets to the crypto markets now is uncanny. And we were very involved in the very beginning before it was regulated in Forex, and if I had to say I was looking into a crystal ball, I was like, oh my gosh, this is almost the same thing. What we did in the Forex markets is we built education. So we taught people how to trade in the foreign exchange markets. Then we provided signals. Then we provided automation and then managed funds, etc. So getting into it now, because I saw all of this and I was like, there has to be more awareness to get mass adoption and to let people understand that the digital currencies shouldn't be feared. It is the wave of the future. The monetary system is going to change, and it's something that can basically connect the entire world together. We created ATS, which stands for Alt Trading Systems, and we're providing education, we're building automation. We have a piece that combats large market manipulation.
None of it matters if people aren't going to use it. So we need either dApps or some type of utility tokens that people are actually going to be using, and that in turn, before we get to the position where we actually, we are revolutionizing the real estate industry. We have to get people comfortable with this first. So how do you do that?
Yeah, the mass adoption is a really huge piece, because for most people, they just hear the word blockchain or cryptos, and it's way over their head. And we were kind of talking about this earlier. And the problem is people don't really care about blockchain per se. They just want to know, is it easy and is it going to make my life simple, and how do I use it, and how fast is it? And so I could get really super technical. I'm going to try not to.
Please don't. Please don't.
The interesting thing that I think a lot of people miss is that they see crypto and they see blockchain as two completely separate things. I see that there's actually more of a relation between the two than a separation. So understanding how all that works, I mean, it helps people become more comfortable too.
Yeah, crypto or digital currencies wouldn't exist without blockchain.
Let me ask you, Henry, what's an STO and why is it important?
That token to investors. And that token has to comply with all the relevant securities laws. And typically to date, most of them have been issued under some sort of a registration exemption. So Reg D, Reg S, you were talking a little bit about this earlier, Reg CF, and the first tokenized Reg A Plus was actually just qualified, but it was also basically neutered, so it's barely a tokenized offering at all.
Is this like another session, or could you briefly tell us the difference between A, SD, and CF?
Sure. So besides being the left keys on the keyboard,
that's
ASD, right?
Yeah.
I remember that when I was in elementary school. I used to
S
teach
space.
It just brought back flashbacks.
Right. So a Reg A Plus, so all four of those are basically, they're exemptions, which means that you don't have to file a full prospectus with the SEC. Each one of them has different restrictions and different ways that you can target investors and different kinds of investors that you can target. So Reg D is by far the most widely used form of capital formation in this country, which probably means it's the largest form of capital formation in the world. Trillions of dollars of money go through Reg D issuances every single year. And Reg D has three different tiers, three different types, 506B, 506C, and a 504. And the 506s are the important ones because both of them allow you to target accredited investors, and one of them allows you to do a general solicitation. So you can basically go market your deal widely, but the people who come to you to buy the securities have to go through a very strict accreditation process. Should we talk about accreditation?
I don't know.
Okay. Reg D is interesting because it allows you to have a deal and go out and market it widely. A Reg S allows you to target international investors and have them invest in your deal, but it's subject to restrictions like if you issue securities through a Reg S to foreign investors, you have to make sure that those securities will not find their way back on shore within a specified time period. Reg D also has a restriction where they can't trade to unaccredited investors for 12 months. And then Reg CF, you can both do general solicitation, which is marketing, and you can also bring in unaccredited investors. But the unaccredited investors can only invest a certain amount of their net worth or income, and you can only raise $1,070,000 through a regulation CF. And then Reg A Plus is sort of like the holy grail, which has a $50 million cap. If you do, there's a tier 1 and a tier 2. Nobody really does tier 1. But tier 2, there's a $50 million cap, and you can market the deal, you can do general solicitation, and you can bring in both accredited and unaccredited investors. And there's also an interesting corollary here. There's something called 12G, which is a restriction on the number of investors that you can have in a deal, which is something that's very interesting because we talk a lot about the power of blockchain to democratize finance. But as long as you have something like 12G restricting how many investors you can have, you can't really democratize an equity investment because you can only have 1,999 investors. And if you break that 2,000 investor cap, you have to register as a publicly filing company, which is onerous and costs a lot of money. You have to bring in a special auditor. It's not something that you want to deal with. So Reg D, Reg CF, actually I don't think Reg S has that restriction, but Reg D, Reg CF do. Reg A plus under certain special situations does not have that restriction, which is also something that makes it very, very interesting. Sorry if I got too far into the weeds.
No, that was great. I appreciate that. Did either one of you have something to add to that? Because I saw you kind of
Wow, he nailed it. He's
Did he?
awesome.
Henry,
Now you know why he's on the panel. Because he nails that stuff.
Yeah, we love him.
no, just that, right now the markets are deregulated and, there's a lot of sway back and forth about the regulation bits because it's still very vague and uncertain in a lot of ways.
Mhm.
And it's a good opportunity for a lot of people who aren't accredited investors to get into the markets. So one of the things that's kind of scary for people is that I'm pro-regulation, but I also understand both sides of the fence on it. Because once regulation comes in, it's not very cheap for the masses to get into it and actually participate
Yeah.
in these fabulous markets.
Right.
And
Sounds
so,
like you're running for office.
yeah,
That's 2020.
no.
Vote for Ezio! Vote!
There's an evolution to this whole
Well,
entire
we've
process.
actually
You gotta
talked
do
about it
deregulated
before.
and regulated.
And there's a thing, there's been some chatter about got people self-regulation, and for me, as much as I love the idea of that, I think it's a pipe dream. And
From what
and
perspective? Yeah.
yeah, because unfortunately, people can't control themselves, and let alone regulate themselves. So it's like there's a catch-22 to it. As much as I love it, and I love the whole entire decentralized aspect to it, and I love the fact that the markets are deregulated, I think that regulation is going to come in and it's going to
come
change
in. It
things.
needs to have, there needs to be
Yeah.
a balance. There needs to be a comfort level for people so that it actually can get to that next level.
Right, but that's where the mass adoption comes in, and it's a huge play because a lot of people can still really get into these markets, and
The time is now. If you want to invest in
knock on
Facebook,
wood, knock on wood, maybe become an accredited investor.
Yeah,
Because-
The
exactly.
Wild West didn't get settled until it was no longer the Wild West,
Yeah.
right?
Right.
It's true.
It's good. What's the Wild West? No matter what. Virgie, I'll start with you on this. Where are we in the STO world right now?
Oh
What's
gosh. If you're doing an STO, there's a lot of work you need to do before you're doing anything on the blockchain. You need to build the front foundation. You need to make sure that you're SEC compliant. You have to build it like a really good, solid IPO. The foundation has to be there. And then your whole wireframe, your whole entire flow process of everything you want to do has to be very, very clear because building on blockchain is very expensive. You got all these people going, oh, we're building blockchain. Well, if you are building blockchain right off the gate, you're probably a company who's running very, very fat, not lean, because you shouldn't be building blockchain until you've got everything completely dialed down, then you're building the blockchain. So I think 3 to 5 years out, before a solid company comes out, there's a lot of things that need to be fixed in order for an STO to digitize like real assets, like a property. For me, it's all about branding and awareness and making sure that people are aware so that when we get to that stage, that it's a very, very easy transition. We've educated them, we come in like a little incubator, we get them prepped, and then they're ready for that next level. So it's really just understanding the ripples that are happening in the evolution of blockchain and emerging technologies.
There's an interesting misconception of an STO, which is that it's just like an ICO, where you create a token and people buy it from you. But the actual tokenization aspect of it is very much a secondary concern. Really all that you should be worried about, just like any other capital formation, is actually raising the capital. And creating a tokenized offering doesn't really help you with that. As Virgie was saying, there's so many other pieces of this market that are missing before you can have a truly liquid and fully functioning primary issuance market. So right now, one of the gentlemen over here, I think, was talking about syndicating a deal, right? You wouldn't go to Securitize and create the tokens and then go try to sell the tokens to your syndicate. You're just adding complexity that's not necessary. And since you would probably be raising money under a Reg D exemption anyways, your tokens should be locked up for 3 to 12 months. And so in reality, you should go to your syndicate, raise money the way that you normally would, put a addendum or an extra line in your investor materials and say that in the future we may tokenize this position, and you could take delivery in the form of tokens if you want. And then 10 months down the line, when you're actually, once that lockup is burnt off, Then you go to Securitize or Securency or Polymath or Harbor or whoever, and then create the tokens. But the other way around, you're just adding complexity. It's going to cost you money. They might take a percentage of the raise, and it's an additional thing that you have to explain to your investors. Why? What are these tokens? Why do I need them?
How are they going to be traded?
Patience is a virtue, and that we're early in the process, and we got to be careful about this. There's a theory out there that STOs are just simply a reincarnation of ICOs, and the Wild Wild West will begin again with a different acronym.
Because there are two significant differences between the two that will prevent STOs from becoming like the ICO Wild West. And those differences are that, one, you have the restriction to accredited investors for most of the registration exemptions. And so you don't have that huge retail sort of, everybody's just market to anyone and anyone can buy your token. You can't do that anymore unless you do a Reg A+. But a Reg A+ is very expensive to do. So the difference was that with an ICO, you could write a white paper, spend a weekend, copy someone's white paper, pull some faces off of Google, and then release it and raise $10 million. And it costs you absolutely nothing.
Was I sleeping through all this? My God, that's a lot of money.
Yeah. Yeah. It was funny because when we started Slice, everyone was coming to us and they were like, ICO, ICO, ICO. And we were like, no, I don't want to spend the rest of my career looking over my shoulder, or having like an SEC censure or like being banned from operating a public company or any of that stuff. So we did an ICO and we didn't raise a ton of money. But I think it was probably the right decision to make at the time, because otherwise I don't think I'd be here in front of you guys.
You'd be in jail.
Yeah, or in a bankruptcy court.
So you're one of the good guys.
Yeah, well, I never worked on a single ICO. I did buy my fair share of, what are those coins called? I think it's a 4-letter word.
I don't know. Was F coins? Something like that.
And other than that, though, no, was never involved in an ICO. But so you have basically two massive hurdles that basically prevent STOs from becoming like ICOs. And last year, as the ICO market was cooling and the STO market sort of came to the fore, you saw a lot of press of companies saying that they were switching to an STO. They were canceling the ICO and they were going to do an STO now. And pretty much all of those just disappeared, right? I mean, there have only been about a dozen STOs to date. Yet there were hundreds of companies 12 months ago saying that they were going to do STOs. And they realized, one, they couldn't do what they had planned to do with an ICO, where create a Telegram group, bring in 30,000 people and talk about how your token's going to the moon. You can't do that, right? Yeah. And then two, was that it was going to cost you a lot of money. You needed to get a securities lawyer. You needed to, if you're doing a Reg A+, you needed to do I'm blanking on the name right now, but you needed to do a Form A filing, which is a significant document. And you would have to go through multiple rounds with the SEC, and every single time that you go through a round with the SEC, your lawyer is billing you for several hours of work at $1,000 an hour. And so it starts to add up. I mean, it can cost you over $1 million to do a Reg A+. And so that completely changed the mentality around it. And it also caused people to stop so much looking to the retail side of it, the democratization side of it, and say, all right, well, how can we use this technology to improve the way that institutional players access assets?
Platforms like Polymath, were they supposed to offer an easy, quick process to do the STO, or you still have to go through the SEC process?
So we didn't struggle to get through the SEC process. We did a Reg D with a Reg S corollary, and a Reg D and a Reg S are actually quite easy to do. There is no approval process. You simply file a form certifying that you've complied with the rules around that exemption, and you don't even have to file that form before you start raising. You can start raising capital and then file the form within, I think it's 10 business days of the first money hitting your bank account. Now, I'm not a securities lawyer, and if I was, I'm not your securities lawyer, so none of this is legal advice.
Here comes the disclaimer.
You were saying that it will cost companies a lot of money and time, getting the SEC approval for STO.
So a Reg A+, you have to go through a qualification process. And that is pretty expensive, but it is not an approval. And you can never ever say that the SEC has approved your deal, because the SEC does not approve the merits or the quality of a deal. All they say is that you have hit the requisite disclosures to allow your deal to access the markets. But you can take an absolute crap deal and do all of those disclosures and access the markets. It's just that bad deals don't get funded, so why would you spend all the money accessing the public markets, right? What was the second part of your question?
No, that was pretty much just trying to understand why the company struggled to get through the STO process.
Yeah, well, that's basically what I just been explaining about how the thesis that we had about the type of investors that we would attract turned out not to be true.
I think he has a question.
What are your thoughts on the future of blockchains in terms of is there one blockchain that you see potentially ruling them all, or
Oh my goodness.
or very heavily dominating, or is it billions of blockchains and just a different one for every use case?
That's a good question.
It's a really good question.
I feel like I'm at the bridge in Monty Python.
Well, there's going to be different iterations. In fact, there are some other technologies that are coming out right now that are even looking to take out blockchain and be the new type of blockchain technology.
What are you talking
So-
about?
Hedera, yeah. But
I like EOS.
yeah, EOS. But yeah, EOS was on blockchain too. But yeah, there's going to be different iterations, and as the future takes hold, you're going to see just like Web 2.0, right, and the various versions of the internet, etc. So it will be interesting. That's a good question. It's hard to answer because it's so new.
Every blockchain is a trade-off on three things, right? It's speed, security, and decentralization. And so every single one out there basically trades one thing to the benefit of the other two. And so I think that most likely we'll have different blockchains that fit different applications better.
Different ecosystems,
Yeah.
This question is for you, Virgie. So I do agree with you actually 100% that education is probably the most important thing to get mainstream adoption. We have to teach, we have to encourage, because the technical side of things, very few people will understand. But your average grandma down the street or your neighbor, they're not going to be really interested as much in that because they probably don't understand. So my question to you is, because you are into the education side, what do you think is the most important topic that you stress with the people that you meet, that you think is the most important, that in order to get that mainstream adoption, get their attention, what kind of thing do you focus on? Is it maybe just cryptocurrency in general, what it is? Do you think it's more understanding, teaching them the benefits of a blockchain? Like, what do you...
It's kind of a little bit of everything, and I think that the thing that I've connected with people mostly, because I've tried every avenue. I've tried them all. If I try the crypto way, it's way over. People are like scared by it. You try blockchain, they just don't understand it. They just feel they're not smart enough. So I actually started blockchainmommies.com. I started real estate on the blockchain.com. And what I'm doing is through my education, I'm starting different funnels to target different niches so I can speak to different people at their level. So like the way I would speak to a realtor about how to stay relevant in your industry so that you can position yourself for the future is not the same way I would talk to a mom or somebody who get into these emerging technologies, become aware. So because it is deregulated right now, I feel a really big push for myself to actually get the message out now, because for people who just like me and you who aren't accredited investors that don't have $30,000 put away to invest, none of this blockchain technology you're not going to be able to invest in it once it becomes regulated. So for me, it's a really big push to tell people and get the awareness out now. So I think everybody should be vested into to blockchain, I say, because it's technology that you're investing in, but into altcoins, or not Bitcoin because it's so expensive, but altcoins. Like I love Tron, I love Stellar, I love Ripple. So these are the ones that I just kind of hold on to, and I just think if everybody just took maybe 10, 20 bucks a month, or maybe just bought $200, get invested, don't do anything to put your money away all into it, but just so that you're aware, so that you're not waking up 5 years from now going, oh my gosh, what just happened? Where was I? Like you said, where have I been sleeping this whole time? So when you're vested into something, it gives you the initiative to want to learn. You become more aware. like when you want an Acura or you want an Audi or something, and you actually put your mind on it, you go everywhere and that's all you see is Audis and Acuras. It's the same thing. By being vested into something, it's when you hear anything blockchain, it's just going to, you're gonna be more aware, and it just changes it. So being this early in on it, who knows where you're gonna end up being? I mean, you could be a part of some huge blockchain company 5 years from now, just by being aware now and understanding how it all works from beginning to end. You'll have a perspective that not everybody else would have. And that, to me, is really important, especially in the early stages.
Awesome.
A question for Ezio.
Yes.
So as a trader, how long do you think we'll stay in this crypto winter, and what will drive
The dry spell.
Boom.
Well, it's going to turn around. Everybody asks me, oh, hey, what is it going to be tomorrow, the next day? There's so many people. Everybody gets excited as soon as they start seeing it spike up a little bit. They're like, oh, it's turning around, it's turning around. They start buying. This goes into the market manipulation piece, okay? And is the crypto winter, quote unquote, going to turn around? Yes. If I had a crystal ball, I probably wouldn't tell anybody. but no, honestly, yeah, no, it is going to turn around. The biggest thing is right now, it's perfect opportunity to go in and to buy some fantastic alts and hold them. I don't really buy Bitcoin. I only watch Bitcoin for the ebb and flow because everything is connected to Bitcoin, okay? So when the markets go up, all of them tend to go up. When they go down, they all tend to go down. You could take a chart, a Bitcoin chart, and almost overlay it on any other altcoin. They're almost identical.
Yeah, they even notice a correlation between stocks too.
Yeah, oh yeah, but yeah, that's a whole other topic. But anyway, but I can't say, hey, it's going to be this week or next month. I am anticipating that it's going to turn around and we're going to see it not rush up to the 20,000 level. There's guys out there, it's going to hit 100,000 or whatever. No, what we want to see happen instead of these big giant spikes up is a more stable growth. And we're anticipating, my team, that we're gonna see it start to turn around and go to the $8,000 to $12,000 range. But right now, we're in an interesting point. It's been channeling for the last few weeks between this 3,800 and 4,000. There's a lot of resistance in this 4,000. It's getting rejected off and pushed down. We're anticipating that it's gonna dip back down again. And for how long or exactly when, can't say. But looking at the charts and looking at the markets, and just my gut feeling is that, hey, it's definitely going to hit a point where it's going to dip again, and then it's going to start to turn around and recover. There's still a lot of uncertainty with all the regulation stuff, and you have all these market manipulators that are really hurting the markets, and this actually translates and correlates to even real estate transactions.
So thank you very much. I really appreciate you guys being here. I really appreciate it. No, I'm hugging you. Thank you so much. You guys are awesome.
Thanks a lot.
Yeah.